The dollar has staged a rebound with some big high impact data in focus this week. Is it going to continue to the upside? Let's jump straight into this. Hey, baby, happy Sunday. I hope we're all well and truly lit. Yes, we're back. We're back with another week in these beautiful markets. And obviously, things just continue to get interesting and even more volatile because in the latest week, we can see the greenback has staged a rebound. Now, everyone's asking, why is the dollar bounce now? Do you remember, guys, what I said in the last sort of few rundowns? I said, right, that this dollar downside is near term. Do you remember I said that? Near term, not long term, it's near term. Obviously, we've bounced. We've bounced a lot earlier than I thought we'd do. I thought we may come down to this sort of 103 area, mid 102, before then getting that bounce and committing to the upside. But we've done it in the latest week. And obviously, if we refresh our memory, the reason for this big sell in the last couple of weeks, one, we had a dovish Jerome Powell, okay? He completely shifted his tone by noting that we've made substantial progress on bringing down inflation, okay? So that's one. Two, remember, we had the lowest CPI readings from the United States. They largely came down. When you look at US CPI, those last readings across the board, were lower. Okay, we saw lower inflation across the board from the United States. Now, if we take a look at last week's data, before we talk about everything else that obviously the dollar's been exposed to, I just want to talk about last week's data from the United States. Let me filter this out. Dollar. Okay. Now, one of the narratives that we are trading was obviously getting closer towards rate cuts, right? And a softer tone from the FOMC chair. But it was also economic cracks. We're seeing cracks in the economy. So everyone was trading this. Look, dollars, now, we're getting closer towards a potential recession. The data's been bad. Labor market's getting worse. But really, last week just calmed a lot of those concerns with some of these data points with, for example, obviously Empire Manufacturing Index, not great there, but not totally bad. Okay, out of line of previous expectation. But retail sales here, if you look, decent numbers, bullish. Previous numbers revised higher as well. The building permits, which was solid, okay, as you can see. So building permits, industrial production, smashing expectations there. Obviously, unemployment claims, not the greatest by ticking slightly higher. Philly Fed manufacturing, smashing expectations than the previous. So really, when you go by this week, and obviously bear in mind, it's been a sensitive narrative, okay, a talking point that potentially you've got these economic cracks. This data this week just pushing back on that, be like, look, calm down. We're still performing relatively well as an economy. We don't warrant aggressive rate cuts. We don't warrant, you guys talking about the US falling into recession. No. We're not getting near that. We're going to have this soft landing, okay? Guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon, and it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why is the price just spiked here because of this fundamental reason? I don't understand it. Because all this information's over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. Okay, this soft land, not a hard land, and spin into a recession, a bear market. Okay, so that's why the dollar staged the rebound in the latest week, as you can see here. And really, when you look at this candlestick, this weekly candlestick does indicate reversal, okay? We had the protection, that psychological 104 mark. On a daily, as I said last week, you see how we're structured to the downside, okay, respecting this trend line, printed lower highs, lower lows. We broke out of that structure. Obviously, we've got to deal with this supply here around this mid 104 region, 104.50, as you can see along that dotted line there. Oh, there, break down that supply. Then we're going to have a firm run back into 105 territory, okay? Now, obviously, this week, we're going to be focused on PMI data from the United States. This is fast forward. PMI data is manufacturing, PMIs, services PMIs are the big ones, and GDP, obviously, unemployment claims, and the Fed's preferred measure of inflation. Now, generally speaking, Well, the large focus is on the Fed's preferred inflation. If that ticks higher on Friday, that just cements this dollar recovery, and it will finish firmly in green territory. But otherwise, GDP, obviously, the growth of the economy expected faster pace of expansion of growth in the latest quarter at 1.9%. Unemployment claims expected to tick lower. We'll keep an eye on this GDP price index. Sorry, I'm being a bit sporadic here, guys. We'll keep an eye on this GDP price index. The reason being is, remember, this is inflationary, right? Or deflationary. At the moment, it's inflationary. So prices have really, when you look, generally speaking, have remained elevated, okay, sticky. This is the prices of all the goods and services that make up that GDP number, okay? So we're going to keep an eye on that as well. That shouldn't be overlooked. And of course, look, existing home sales, all these orange data points as well, we'll keep an eye on, because we just want to see if that narrative is valid or not, okay? Last week, obviously, we invalidated that with a generally decent data. But if this data this week proves to be solid, then again, that's just pushes largely back on it and just helps the dollar move to the upside. I hope that makes sense, guys. So the themes are, okay, when we're talking about themes, as a reminder, we've been talking about the dollar downside because of the theme of softer Jerome Powell, softer FOMC stance, getting closer towards rate cuts. That's a theme. We previously had lower inflation, okay, driving dollar to the downside. Okay, so that's a theme. We also had added to the narrative softer data in past couple of weeks. Remember, with softer labor market data and all that. Again, that's a theme. And now we're sort of trying to change that theme, change that narrative with potentially better data. Maybe this inflation proves to be sticky, the Fed's preferred measure of inflation, so we can see the dollar obviously bouncing. Now, one of the reasons for the dollar bouncing as well was because of its counterpart. Remember, the VIX is made up over 50% weighting euro. Now, obviously, you can see it's a bearish candlestick there on Thursday. Okay, a bit of a bearish engulfing of Wednesday's upside. Okay, green candle, because the ECB left the door open to rate cuts in September. Okay, to a rate cut in September. And remember how we were expecting and markets were positioning for potential pushback from the central bank because they remain divided, right? They've been divided and that inflation's still sticky. But should they see that the inflation coming down next couple of readings ahead of September, then they're going to be open to cutting, potentially slashing rates. Now, obviously, on the weekly, we'd been moving within this descending channel, this big potential bull flag. And obviously, we'd broken out of that to the upside the week before last. Naturally, if we break down, look on the daily, right? If we break down this demand zone at 108.80, we're going to see quite a quick drop down towards this psychological 108 mark, okay? That's, for me, naturally the next major area for us to come down to. And obviously, that's where that trend line is running as well, okay? Remember that trend line that we breached here, this channel, okay? Where we're expecting structure to the downside, okay? But positioning for potential breakout, and obviously, we saw that breakout. Obviously, that's in the fate of the dollar fundamentals, but then also we've got key data points from the euro, okay, in the form of PMIs as well. So we're going to be keeping an eye on these. Last readings were just bad. Okay, when you look across the board, remember we capitalized on some shorts at that point. I remember, if you remember. So these were bad. Okay, so there are signs that we're seeing softening here in the Eurozone on an economic level. And obviously, should these come out worse, this will only reconfirm that. And if we have the better dollar data, this is only heading one way. It's a southbound train for euro dollar. Guys, I hope you found value in today's video. As a reminder, I cover macros on a daily basis via the TFTC premium community, where we cover all those key fundamental narratives, all the key talking points and themes that are driving the direction of the assets that we're trading and how that fits in structurally with what's going on technically and looking for those opportunities on a daily basis. You guys already know the deal with that fundamental bootcamp. For those that are serious, that are really keen to take their trading to the next level, you can check that out via the description. Other than that, smash up that subscribe button again for me. We've reached 10K, which is amazing. Let's get to the next milestone of 15K. Hit up that like button, drop a comment below if you found value in this video. Stay lit, stay blessed, and let's get it.